We've got banks collapsing, US dollars under attack, looming recession. What is going on? How do we step back and think about this moment?
I look at three major forces that are happening now, haven't happened in our lifetimes, but have happened many times in history. And those three major forces are the creation of a lot of debt and the printing of a lot of money to buy that debt, particularly because the government is running large deficits. They don't have enough money, so that government has to print that money. So that creation of all of that debt and its financial implications and its economic implications is one force. The second force is the amount of conflict that's internally, largely due to the largest wealth gaps that we've had since the 30s, and that produces populism of the left and the right, particularly when there are financial difficulties. The third force is the rising power challenging the existing power, largely in the form of China, and to some extent Russia. I call it the great power conflict, because in 1945, there's this cycle. You have a war, and after a war, you have winners, and the winners determine the rules of the game. And then there's this evolution of others becoming more competitive, and then you have a conflict again for who's in control. So we have that dynamic taking place. So those three influences, the financial, the internal conflict, external conflict influences, are having a dominant influence. I went back and studied history, the last 500 years, on these cycles. There are big cycles that last about 75 years, give or take about 50 years of rises and declines. I also learned in studying history that there were two other influences that were very big. The first was acts of nature, such as droughts, floods, and pandemics. The changes over time in the evolution over time of people's learning and the technologies they make. So I'd say there are the really five big influences that drive everything, and they are the money, debt, economic influence, the internal conflict, the external conflict, the nature influence, the technology influence. So as we go now into this, it's important. And since they each affect each other, it produces what I call the big cycle.
It makes it seem so predictable from a historical perspective when you look at that big cycle and you see how it repeats. And so as you went through the last 500 years, one thing that you make very clear in the book is that the rise and fall of empires, the rise and fall of a reserve currency, they go in this 6-cycle trend. Phase 6 is basically war and collapse. And so you have that previously dominant power loses its position, loses its status as a reserve currency, and it loses it for pretty predictable reasons in the three forces that you were talking about in the beginning, discounting the fourth force, which I don't think in every cycle you always had, and you correct me if I'm wrong, but you didn't always have a pandemic or anything like that. But the fact that we're living in a moment right now where we have all of them, not only is it a moment of massive technological disruption right now, so we've got, printing because of COVID, we've got printing coming off of printing because of the 2008 collapse, and now we're again seeing this cycle repeat itself. So I've heard you say that we're in somewhere in phase 5, which is as the empire begins to decline, as you have a rising superpower, as the debt bubble is getting out of control. With that perspective, was what happened with the SVB bank collapse, was that something that you knew, okay, something like that is coming, or was that a surprise to you?
No, it was obvious. I want to talk about the mechanics, really. I'm so eager to pass along an understanding of the mechanics so people themselves can do the analysis. So one man's debts are another man's assets. Okay, so what happened? The government had to sell a lot of debt. And when it sold a lot of debt, there were a lot of entities that bought a lot of government bonds. And money was very easy, which meant that short-term interest rates were very low, and money was actually being given away because they had interest-only loans, and interest rates were less than 1%, and you didn't have to pay back principal, so you could go get money. And so that created a lot of debt, and it created a lot of buying of government bonds. So what what happened to Silicon Valley Bank is what happened to many, many entities all around the world, not just banks. A bank takes in deposits, typically, or debt in some way, and then it buys debt. It can do that in the form of making a loan, or it could do that in the form of buying a government bond. And then when interest rates went up, the value of that debt went down. The money they had to give to depositors became more and more expensive. And also depositors, wanting them to be competitive, looked at money market rates or other rates and withdrew money from the bank because they had better uses. Okay, so what that leaves them with, it's a banking problem that has happened literally for thousands of years. That what they do is the depositors, want their money back, and they're holding assets that, in this case, have gone down in value, so they're broke. So the risk when it's a government is not that you won't get the money back. Like in this particular case, for a bank, it goes down in value, so you ain't going to get that back. You're going to sell it. What happens for the economy as a whole is then they print the money because they don't want defaults. There's a tolerable amount of defaults, and then you get past a tolerable amount of defaults and it just crushes everything. And so they print the money. And so this thing with the bank is not a Silicon Valley Bank alone issue. It's not a banking issue. It is a global issue in terms of all around the world, all sorts of entities, pension funds, insurance companies, all around the world. There was a lot of the buying of these government bonds, which have gone down in value. And if you then take it and you say, what's the value of those? Those have gone down. And the cost of money is high. And so the world is leverage long. Okay. Long, meaning they own stuff and they borrowed money to own it, and it's going down in value. The big issue is, the government can come in and print the money and give money to anybody they want to give money to. But when they do that, that typically devalues the money. Think about it. If you're holding a bond, you got a claim on money, but the claims are too much. So one way or another, you're either not going to get back that money in full, or you're going to get back money that's worth less. The fact that it's happening with the other influences is very important because they affect each other. So this financial picture, by the way, is the same as in the 1930 to 45 period, and the same as they were throughout history. Like a disease, like a cancer, you see stage 1, 2, 3, 4. If you have these things, you could look at it and you could diagnose, and you see it moving from stage 1 to 2 to 3 to 4 to 5 and to 6. And each time you come closer to a bad set of circumstances, bad financial circumstances, and bad fighting over things.
There are things that have not happened in our lifetime, but they happen over and over and over. When we printed money, when the Fed printed money to backstop what looked like it was going to be a potential contagion from SVB, obviously I think there were 5 banks that ended up failing. Is this now contained, or is what the Fed did just going to forestall something that's inevitable?
The dominoes are beginning to fall. I mean, you know what the next dominoes are. And so, for example, they're not going to buy the debt. Well, and therefore, when the government sells more of the debt, there's not going to be an adequate number of buyers for that debt. You know that those who are hurting because they have those losses won't make loans, and a lot of those loans went to real estate, particularly commercial real estate. And you know that for various reasons in commercial real estate that we don't use it the same way and so on. So you're going to have problems in commercial real estate. So you can see that if you said, what is the value of those assets that are being held, that value has gone down a lot. And because it was bought on leverage, there are bad losses in different places.